But let's shift focus at the AMFI numbers for the month of February. Well, the industry's net inflow stood a little about at 40,000 crore versus net inflow of 1.8 lakh crores last month. My colleague Niraj Shah joins us with more details on this one.
Well, the monthly inflows of February, there are 2-3 ways to look at it. Now, if you look at the SIP flows, let me start with that. There is a 400 odd crore reduction. Now, that to my mind is explained by the fact that month on month, that is explained by the fact that February is 28 days, Jan is 31. So that explains SIP flows. So SIPs have stayed true to nature. What has gone down, most importantly, so the active equity funds have seen net inflow dip to 29,303 crores versus inflows of 39,688 crores month on month. A lot of it is explained by mid-cap and small-cap funds. Mid-cap funds have seen net inflow go down to 3,400 crores versus 5,148 crores. Small-cap funds have seen net inflows go down to 3,722 crores versus inflows of 5,721 crores. So nearly 2,000 crores gone in small-cap funds and nearly 1,800 crores or 1,700 crores gone in mid-cap funds. Large caps are okay. 2,866 crores versus inflows of 3,063 crores. Flexi-cap funds are okay, about 500 crores lower. Mid-caps and small-caps have seen a large dip. Sectoral and thematic funds, not a bad thing actually to happen, have come down to 5,712 crores versus inflows of 9,017 crores. And NFO flows are down as well. So effectively, the scare in the markets, remember, 1 year of very low returns or no returns in certain cases, and certain fund managers going out and saying that SIP flow should be removed, done away with. I think that is probably what has led to this. Now the key question is, does this continue in March, wherein March is stable, or does March continue to see a downtick in inflows? One hopes that that doesn't happen in a big way, except for certain pockets where it might be prudent to do so. So sectoral funds, for example. But I think March is a litmus test. Why I say this before I end, why I say this is because even in the Macquarie feedback from European Union investors, Macquarie was told that global investors are watching out for what the Indian domestic retail investor does in mutual funds. So I think it's a very important barometer to keep in mind.
Well, sticking to the mutual fund data, in fact, as Niraj sir was pointing out, if you look on a month-on-month basis, yes, the net equity inflow has come down by around 10,000 crore rupees. But who are the main contributors? Which segments or themes are the main contributors to this fall that we are seeing on a month-on-month basis? Firstly, we need to understand that there are 3 less days compared to what we had seen in the month of January. And if you look at scheme-wise, is the sectoral and thematic funds where we have seen the most amount of inflows going down. It has come down by nearly 3,300 crore rupees, which means that of the 10,000 crore rupees, 1/3 is well contributed by lower sectoral and thematic funds. Then there is small cap funds and mid cap funds, which have also led to a downtick of around 3,500 odd crore rupees combined basis. Then there is large and mid cap fund, which have seen a decline of close to 1,500 crore rupees. So to sum it up, nearly 80% has been contributed by these 4 schemes, which have led to this lower downtick in the net equity inflows, which means that around 10,000 crore is what the equity inflow has come off, and 8,000 has been contributed by sectoral funds, small cap funds, mid cap funds, and large and mid cap funds. So that is the main thing that we should watch out here. In fact, if you remember, sectoral and thematic funds have been always been volatile, because largely it depends on whether there is a new fund offer or not when it comes to sectoral and thematic funds. So it doesn't seem to be a bigger fall if you look data into perspective when it comes to the net equity inflows. Apart from that, which are the sectors, in fact, where mutual funds have added or reduced exposure? When it comes to adding exposure, financials, metal, healthcare is where they have added exposure in the month of Feb, while they have reduced their exposure in sectors like industrials, IT, auto and auto ancillaries. Apart from that, their cash levels continue to remain higher at around 6.1% as against 5.6% that we had seen in the previous month. And which are the stocks where they have put in most of the money, and which are the stocks where they have actually exited? When it comes to large cap, they have bought Soumeet, Power Grid, Zomato, Warren Beverages and ITC, while they have sold PNB, Indian Oil Corporation, Wipro, PFC and Bharat Electronics. When it comes to mid-cap names, mutual funds have bought most of Vodafone Idea, Yes Bank, IDFC First Bank, HPCL and NHPC. So a clear shift what we are seeing from large cap IOCL to a mid-cap HPCL in the month of Feb. And on the sell side, we are seeing Suzlon, Ola Electric, IndusInd Bank, NMDC and Hoodco. And lastly, when it comes to small cap names, there VMart, Bandhan Bank, Crompton Consumer, South Indian Bank and Piramal Pharma is something that mutual funds have added the most in the month of Feb, while they have sold Motherson Sumi Wiring, City Union Bank, Manappuram Finance, CSE and HCC. So this is broadly where mutual funds have actually bought and sold or the mutual fund activity that we have seen in the month of Feb so far.